Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, April 11th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
Always great to have you on. So let's start off with one of your recent research reports. You put out a JPY cross-asset report entitled JGB and Foreign Bond Selling Battle Continues Amidst Upward G10 Rate Stress in the Tokyo Market. In the piece, you note that Japanese investors were sellers of bonds through the end of March. Take us through that in a little bit more detail.
Mm-hmm. Japanese investors' sales of the foreign bonds increased considerably towards the end of March. They realized losses on their G10 bond positions at the end of the Japanese fiscal year as 10-year U.S. Treasury yields rose. According to the Ministry of Finance, MOF, data released on April 8th, Japanese continue to unload foreign securities at a fast pace of 2.8 trillion yen in March. This included accelerated selling of stocks and investment fund holdings by 455 billion yen, and all medium to long-term bonds by 2.8 trillion yen. However, Japanese investors turned net buyers of short-term foreign bonds by 474 billion yen. Japanese banks unloaded sizable holdings of medium to long-term foreign bonds by 2.7 trillion yen, clearly shifting to alternative investments. Pension funds, trust banks expanded their holdings of medium to long-term foreign bonds by 892 billion yen and short-term foreign bonds by 129 billion yen, but net sold 631 billion yen of foreign stocks and investment fund holdings as they shifted their weightings. Lifers unloaded a net 618 billion yen of foreign securities, suggesting that they had a strong preference for JGBs rather than for overseas assets. Japanese investors could firstly shorten their bond holding durations and secondly buy more alternative assets as they third take gains and losses and reshuffle their positions at the start of the fiscal year, taking both estimated losses and actual losses on bonds. They have an abundance of yen funds, and they may try to limit G10 yield risk by continuing to focus on yield from alternative assets.
Yeah, the scale of selling out of Japan has been incredible. I think if I'm not mistaken,
Right.
I think Japanese investors were sellers of both foreign bonds and foreign stocks in fiscal year 2021 for the first time since 2013 or something. So clearly, Japanese investors have the dry powder. The question is when and where they use it. So interesting to see that you think they're likely to focus on alternative assets here. So that was pretty comprehensive discussion of what Japanese investors were up to in the month of March, what we expect from them doing going forward. Let's do the same for foreign investors.
Okay. In March, foreigners sold a net 8.1 trillion yen of Japanese securities, including 3.5 trillion yen of short-term bonds, 2.4 trillion yen of stocks and investment fund holdings, and 2.1 trillion yen of medium to long-term bonds. Bond selling and redemption flows dominated among both Japanese and foreigners at the end of March as upward stress on interest rates grew around the world. We expect overseas investors to start rebuilding their JGB holdings after redemptions as they watch G10 bond yields rise. TDBs could be especially popular, given first, increased issuances of 3-month TDBs, and second, the wide level of dollar-yen forward. From April onward, the MOF planned to reduce the JGB issuances year over year, especially 2 years JGBs, and the front end of the JGB yield curve could decline.
Okay, so both foreign investor buying of short-dated JGB swapped into dollars and other currencies, as well as a lack of supply, causes that part of the yield curve to rally. That makes a lot of sense.
Mhm.
Switching topics, Sekido-san, you recently wrote about the BOJ's yield curve control operations as well as fiscal fund flows. Could you please talk that through with us, as well as discuss fiscal year 2022 JGB issuance?
Mhm. The MOF does not plan to hold any 40 years JGB issuance auction in April, but the BOJ will increase the purchases of 10 to 25 years JGBs by 100 billion yen and a 25-year plus JGBs by 50 billion yen. This could cause the long end of the JGB yield curve to flatten. The BOJ has begun increasing purchases in April to June by 100 billion yen for 1 to 3 years JGBs and by 300 billion yen of 5 to 10 year JGBs compared to January to March. The BOJ has increased buying of JGBs to fend off the risk from rising G10 rates. More generally, the MOF is expected to increase issuances of 40 years JGBs and 10 years JGBs, but cut issuances of 2-year JGBs in the new fiscal year.
Got it, and that makes sense that they've ramped up, purchases after having to defend the, defend the range on yield curve control, towards the end of March. Why don't we wrap things up by going over your outlook in a little bit more detail across both yen rate, spot dollar yen, as well as cross currency basis markets?
Fed Governor Lowell Brainer's comments about scaling back the Fed's balance sheet touched off an increase in U.S. interest rates and dollar yen. Meanwhile, BOJ Governor Haruhiko Kuroda commented the recent dollar yen fluctuations, but the decline in dollar yen was only limited. The minutes to the March FOMC meeting calls the U.S. rates to rise and push the dollar yen up to the 124, 125 yen mark. Over the near term, U.S. CPI data for March due out April 12th will be key to watch. The data will likely reconfirm the strong entrenchment of the inflation pressures. Also, if JGB rates near the upper limit of 0.25% under YCC operations, and the BOJ announces another fixed rate JGB buying operation, we expect dollar yen to trade in a 3 yen range at a higher level between 123.50 to 126.50 with a bullish bias. The yen swap rate curve has steepened. Upward stresses on yen rates appear to be deep-rooted. The MOF will hold auction of 5 years, April 12th, and a 20 year, April 14th JGBs. And if US CPI data reads that week confirm the higher inflation, then we think the BOJ could hold the same day and a fixed rate JGB buying operations. Yen rates will maintain a neutral bias as long as they remain under the control of the BOJ. The yen basis curve has been neutral as bond selling flows by both Japanese and the foreigners have stabilized the yen basis. MOF data for March 27th to April 2nd shows that Japanese sold a net 2.3 trillion yen of overseas securities, while foreigners unloaded a net 1.3 trillion yen of Japanese securities. This included Japanese investors buying a net 59 billion yen of short-term overseas bonds, but unloading a net 1.6 trillion yen of medium to long-term foreign bonds, and a net 781 billion yen of overseas stocks and investment fund holdings. Early in fiscal year 22, Japanese had firstly, scaled back their falling bond positions and shortened the duration of their bond holdings, adjusting the G10 bond positions, realizing the Japanese equity position gains at the start of the fiscal year may have been bittersweet. Separately, foreigners net bought 543 billion yen of Japanese stocks and investment fund holdings, while unloading a net 1.3 trillion yen of medium to long-term yen bonds and a net 578 billion yen of short-term yen bonds. Foreigners net bought Japan stocks for the first time in 10 weeks, but continued to unload medium to long-term yen bonds for 3 straight weeks and short-term bonds for 4 straight weeks. Japanese and the foreigners both will likely rebuild their G10 bond positions after scaling back, but with treasuries and JGBs both under pressure, we revise our view of yen basis bias from widening to neutral.
Okay, so you're neutral on dollar yen cross currency or yen cross currency basis rather, also neutral on JGBs, but interestingly bullish on dollar yen. I mean, it's come so far so fast. Amazing to think that it could go further. But great stuff as always. Thank you so much for joining us.
Thank you for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.